Good evening. This episode of the Intraday Price Action Recap is being brought to you by the Smart Money Manuscript. Hello, my name is Timothy Lee Rogers Sr., and I'm the creator of the Smart Money Manuscript. But Tim, what is the Smart Money Manuscript? The Smart Money Manuscript is your roadmap to financial freedom. Inside this powerful course designed to transform your financial future, I've meticulously condensed over 1,000 of my public YouTube videos into 40 highly efficient lessons that span just 2.5 hours. This course is strategically designed into 4 phases to help guide your learning in the most logical and effective way possible. Phase 1 lays the groundwork, covering essential financial literacy like budgeting, banking, and taxes. In Phase 2, you'll move beyond the basics, learning about brokerage accounts, figuring out how much you need for your own individual retirement. You learn about how to do fundamental research on companies, and you'll also learn how to conduct technical analysis by looking at stock charts. Phase 3 empowers you to build a robust portfolio and leverage your capital using advanced techniques like options and futures, and it also teaches you the importance of backtesting your strategies. Finally, Phase 4 takes a deep dive into the advanced ICT concepts, giving you a professional edge. Each lesson includes a short quiz to help solidify your understanding. By the end of this journey, you'll have the confidence and tool that you need to make intelligent investing decisions, manage your money without fear or ambiguity. So if you want to be a long-term buy and hold investor, if you want to be a swing trader, if you want to be a day trader, if you want to trade stocks, if you want to trade options, if you want to trade futures, the Smart Money Manuscript is for you for $69.99. Yes, $69.99 for all of this here. Yeah, hold on 1 second. I'm coming. Hold on real quick. All right. I'm back. How y'all doing today, man? Good evening, good evening, good evening. If this is your first time tuning in to Tim's Tidbits, please allow me to say welcome. If it's not your first time tuning in to Tim's Tidbits, I still want to say welcome. But I want to give you a nice hearty, well, thank you for always tuning in to Tim's Tidbits. If you don't know who I am, my name is Timothy Lee Rogers Sr., a.k.a. Aranya Grande. It's just me, Big Spider View, the Hablo Espanol. And you're tuned to another episode of The Intraday Price Action recap. Now, I was just about to get into it, and then somebody came ringing the doorbell. I looked up, and it's Erica. Right. Everybody in the gang know what time I start doing this, but they be want to come in late, and they know on the live YouTubes when I be making a thing public, I have to stop and let people in because we don't want no crank yankers like coming up in here. So when I be in the middle of talking, and then I hear somebody be coming in. Y'all blame Erica. Blame Erica for this moment. Okay. Now,
Don't do me like that, Tim. Don't do
if Price if Price did so that caught you off guard today, there's a link pinned to the top of the chat inside the U of the tubes. I don't know what year comments are in YouTube, but mine are like right here. Right, there's a link pinned right there at the top of the chat. If I put my hand closer, let me see how close I can get. Right there. Matter of fact, if I do like this, if I do this, turn the screen and turn the camera a little bit, right? You still can't see the comments, right? But it's right there. It's y'all get it. It's right. Oh, I done knocked Dirty down. Sorry about that, Dirty. I done knocked Dirty down. Let me get back together. Let me get myself together. All right, move, monitor. Something's weird now. What did I do? What did I do? Something strange. Something don't look right. All right, something's weird. Okay. All right. Now, click on that link and you can pull up inside the Zoom. You ain't got to give me no email account and nothing like that. Not going to spam you, try to get you to buy the Smart Money Manuscript, even though the link is in the description. First link in the description for $69.99. Probably the best investment you're going to make in your trading and investment journey. Probably the best thing you ever bought. This episode of the Price Action Recap is being brought to you by the Smart Money Manuscript. First link in the description below, $69.99. All right. Shout out to everybody that's participated in the Smart Money Manuscript thus far. Our second Q&A for the Smart Money Manuscript is coming up on the 11th. Let me check that. I don't want to lie to y'all. I don't want to lie to y'all. Somebody that's in the Smart Money Manuscript, is it the 11th? Can you verify for me? Is it the 11th? Somebody who actually cares. Yes, it's the 11th, right? Speaking of the Smart Money Manuscript, this is the Smart Money Manuscript right here, right? It's a course that I put together myself, all right? Smart Money Manuscript. It's 40 lessons, not 40 different videos, but it's videos and quizzes, right? So it's 40 different modules that you got in here, comprised of video and quizzes. The quizzes are to test your knowledge of what you just saw. Starts from the basics and goes all the way through advanced ICT concepts, right? And our next Q&A is the 11th. That's right. It comes with Q&As, monthly Q&As, no extra cost. You can't beat that, right? When have you ever paid $69.99 for a course? You know, and it's amazing information in there. It's not just elementary, basic, bottom basement information. And then on top of it, you get the opportunity to sit down once a month with the course creator and speak with them one-on-one on a live session to ask your pressing questions. I don't think that had ever happened. I don't know. I don't know of a time when that has happened. But first link in the description below. Who we got up in here? We got Deborah up in here. It's not light skinned Deborah today. It's RN Deborah. We got Mike Pence fly up in here. He brought Empire Traders along with him. We got Erica a little bit late. Look, here we go. Here we go with Jim. Hey, come on in, Jim. Come on in. Welcome. Jim, come on in. Thank you. Take forever for Jim to come in. He got cheap cell phone. Jim, welcome in, Jim. We got Jim here. So now Erica's not the only tardy one, right? We have Jim. Jim is here now. We have who is this over here? I can't see that top person right there. I can't see the top person. I see Rhonda Green. My pinned comment is in the way. Can't see who that is on the top. It's a purple circle. So I'm assuming that it's Here to Learn and Share, because Here to Learn and Share has a purple circle. And Here to Learn and Share be spamming comments trying to get the top fan, right? Right now, she's holding down the top fan. Rhonda was the second person to comment, but she's actually the third top fan. And Kim is the second top fan. All right. Rhonda, hope you had a terrific Tuesday day too. The market made me work for the scraps I was able to, sneak from the table. Right. It made me work for it. I probably wouldn't have had to work as hard if I would have just walked away and came back later. But, and coming up around the backside, right? If I would just walked away, I probably wouldn't have had to work as hard. But, I was already invested. I was fully invested. I did send out a message to the gang this morning about 11:30 or so. And I was like, look here, man, the market has, it done drug your boy from here to Nantucket. If you still looking at these charts, walk away. Go touch some grass. Put your toes in the grass. Because, boy, when I tell you, this last day of September, do you remember the very last day of September in the Lord's year 25? I barely made it. Hey, this last day of September took it out, man. We got Felicia up in here. We got Honey up in here. Kim said it took forever to take the Asia high. Forever. I actually wasn't watching the Asian high. I was watching some regular trading hour buy side liquidity that was just above the Asian high. Now I was looking at Asian high. I was like, okay, I'm looking at this price. May want to take, if I think it was the Asian high. It was like some relative equal highs up there at the top. I'll look at it when I look at the charts in a second, right? Some relative equal highs up there at the top, and it was just below. And I was looking at that regular trading hour buy side. I think it was like from like Friday, I think it was. I don't know. But and we had some regular trading hour buy side. I had like some minor buy side because it was from a regular trading hour afternoon, and then the high of the afternoon was the peak one at the top. I'll show you in a minute. But it was some back and forth. It was really take your money time. Today, the ES kind of did the Lord's work. The ES went from like yesterday's low all the way back to yesterday's high. I said, man, this would have been a time to trade the ES today, because whoa, the ES did the Lord's work. Let's get into it, man. Again, if price did something that caught you off guard, there's a link pinned to the top of the chat inside YouTube. If you click on a link, you're welcome to come over here inside the Zoom, right? I will have to let you in, right? If you come in, if I don't recognize your name, right, you will have to prove to me that you're not a crank yanker. So if I don't recognize your name, or if you're not on here all the time and I don't be like calling your name out all the time, if you want to come into the Zoom, right, just leave a comment in the chat that says, Tim, I'm not a crank yanker, right? So I can see that, and then I'll just let you right in. But if I see your name over there in the Zoom and you're trying to come in and I don't know who you are, and you did not say you're not a crank yanker, I will not let you in, right? And there's no need to go and join the Discord just to get access to the Zoom, right? Because we had somebody who did that. They was trying to get in. I wouldn't let them in. So they went and joined the Discord and all of that right there. You don't need to do all that to get access to the Zoom. I just have to believe that you're not going to get on there and do no crank yanking. All right. Man, why am I looking at these different color bananas right here? It says meet AI mode. What is this? This has been distracting me the whole time I've been talking to y'all, right? I'm sitting here looking, right? If you look right over here, right? If y'all look right there, there's this meet AI. It's just been this. I'm like, why are these bananas just sitting here? What's the point of these bananas? Right? And like this one is on fire. And I'm like, it's just been distracting me the whole time. Like, what is this and why? Right. And I've been talking about people crank yanking, and then now it's bananas on the screen. Like, I was just talking to my mom about the problem of feminizing men. You know what I'm saying? And then all of a sudden you got these bananas all on my screen when I'm talking about crank yanking. Right. It's getting to be too much. It's getting to be too much. I think I'm under attack. I think I'm under attack. All right, man. Okay. I deleted all the markings that was on my chart today. Crank yanking is wild. Y'all hold on. I got to get up and let somebody else in. All right. Come on in, Yolanda. All right. Today was the last day of September. Right. I can say that yes, Yolanda, you have something to say? Okay. All right. All right. I'll give that to you. I can say that based off the history, seasonality of September, right? Just looking at the past 5 years seasonality, right? 40% chance of closing. Okay, my fancy dancy is not turned on. We'll come over here and turn that on. 40% chance of closing higher than it opened, right? So based off of recent history, there's a greater chance of September closing negative. 40% chance that it'll close higher than it opened. All right. Over the past 10 years, 40% chance that it'll close higher than it opened. Over the past 15 years, 40%. So pretty much. And we know if you go back 20 years, it's a 50% chance. Flip a coin flip. Right. And throughout all of the history, right, September is typically bearish, right, throughout all of the history, right? See the very bearish, slightly bearish, right, on average. Now, there are years when we have positive Septembers, as we went back and looked through, more so in the the farther back history, like 20 years ago, 19 years ago, but in the recent history, it's been leaning more bearish, right? 10 years and sooner. And then last year, right, out of the last 5 years, counting this year, right? If we just put it at actual, so 2020, right? 2020 September was very bearish, right? 2021, it was very bearish, almost 6%. 2020, almost 6%. 2022, down 10%, 10.5%. 2023, down 5%. 2024, up 2.6%. And then this year, right, up over 5%, 5.4% on the Qs, right? So over the previous 5 years, it's only been 1 year when it was positive. And that was last year, right? So we got the abnormal side of the curve for September, right? August, we got the normal side of the curve for the bearishness, right? But September, right, as we was looking at seasonality, seeing if the bearishness was going to continue, did not continue. And the buy program, the overall buy program that we're in, stayed in effect. And we walked it through day by day, looking at price, saying, hey, based off the high time frame, this is what it is. Based off the intraday time frame, this is what it is, right? We never got that bearish breaking market structure on the daily time frame or higher. It never came to fruition. All of the bearishness that we were identifying, it all stayed on the intraday time frame, right? Never went to the higher time frame. So the selling opportunities that we were looking at, we knew to keep it within the bounds of, okay, we're taking base hits. We're not trying to get into puts and hold puts until October because this is the bearish season. No, we watched the price and said, hey, we're not picking the top, right? We're taking our opportunities to sell when we see fit, right? Me personally, I'm not looking to buy anything for the long term while we're up here at premium prices. So I'm doing all my buying and all my selling on intraday time frames, right? And that's what we've been looking at. Okay. Now looking at our monthly chart. The month is over now, right? A very bearish month for October, right? According to how August closed, we had a 4.85% month on the NQ, right? The Qs, if we go over there and look at the Qs, right? If we look at the QQQ, right? We had a 5.25% month. Remember, we looked, it was like over 5.2%. That's what we just saw on the site. 5.2% month on the Qs, right? So we got that. We're heavy on that 40% side this year, right? And like I said, I contribute that to the fact that we're at all-time highs. Because when we're at all-time highs, everybody and their mama is trying to pick the top. And when you're trying to pick the top, what is Phil going to do? Push the button. Push the button. Phil going to keep pushing the button and squeezing the shorts. You ever heard of the term a short squeeze? Yep. Phil going to keep squeezing the shorts. Keep squeezing the shorts. Right? Keep squeezing the shorts. Just pumping it up, pumping it up, pumping it up. We are, as you know, they like to say, we are overbought like a big dog. Price is overbought like a big dog, right? I don't use indicators, right? I don't use indicators, but looking at this chart, what's the name of the indicator? RSI. RSI. Isn't the RSI? I think I used to trade the RSI. I think the RSI is the one that be overbought and oversold. Am I correct? Am I remembering correctly? Is it RSI? Somebody help me out.
Yeah, that's the RSI.
All right, let's go to the RSI. All right. Relative strength index. I thought it was indicated. It's always been relative strength index. Oh man, I just
Yeah.
learned something. I always thought it was relative strength indicator, but it says relative strength index, right? Put it on the RSI. Boom! What I tell you? What I tell you? Oversold like a mug. Let me see. And it's just on 14, right? So, right, RSI is the purple. Yes. So that's the relative strength. And then whatever RSI based mean, I don't know what that means. I really don't know what that means. We overbought like a mug, right? Did I say what was I saying? Oversold or overbought? What was I saying? Did I say overbought? If I didn't say overbought, I meant overbought. We overbought like a mug, right? Um, I don't know what RSI based MA means. Somebody know what that means? Moving average, RSI based moving average, maybe.
Yeah, that's the moving average.
Okay, yeah. So you can come in here and you can set different ones. I off the what's name is like 14, right? 14. I guess that's 14. And this is on a monthly time frame. And even on the 14th for the monthly time frame, it's overbought like a mug. And then go to like the daily time frame. The daily time frame is coming. It had this dip right here, really took it back down, right? But it's some about these little indicators right here that show you like that 70 and that 30. It's some about these indicators that show you right when it be overbought and oversold and all that right there. Um, so but I don't remember how to use them, but we overbought, right? When I was looking, we had it on the monthly chart and it was showing, I was like, we overbought. And when I had it on there, it was showing it was overbought. It was like, see, it's above that little line. That's the little line where if you get to that line right there, it's supposed to be overbought and you're supposed to just be selling up here above this line, right? When it go above that line, because that's the little overbought line, and that's the oversold line down there. But it was overbought. All right. Just by looking at price, you can see that it's super extended. We're really overbought, and it keeps squeezing it. Right. Look at this here. This is April, May, June, July, August, September. Right. We have not had a negative month. Right. We have not had a negative month since March. March is the last time we had a negative month on the NQ. After that, it's just been going straight. Nothing can stop me. I'm all the way up. It's just been going straight up, right? August gave us a hint that we may be starting that bearishness, that because we was watching that high right there to see if that was going to be our smart money reversal, but we never got that daily break in market structure to the downside, and price has just been uber strong ever since then, uber strong. Matter of fact, we didn't even get a negative August, right? August was like on average, it was slightly positive, right? So it was that's pretty much average. We had a lot of chop and slightly positive. So it was on right with the historical average for August. But September, like we said, we ended September with that heavy on that 40% side. Positive and a huge gain. All right, positive and a huge gain. Now, looking at what we did. Okay, we're gonna go to we'll drop down week by week. I'm putting that line there so that when I drop down in time, it'll show me the beginning of the month. All right, if it shows on all time frames. All right, so this is the start of the month right here. All right, so this is the first week of the month there. I'm going to move this over so that I can see the entire month. All right, so this is the first week of the month. We had one negative week in September. All right, one negative week in September, and that was the week of the 22nd through the 26th. All right, that was last week. This week here, we only had 2 trading days in this week, which was today and yesterday, Monday and Tuesday, 2 trading days in this week. All right, so this week here is going to have 3 trading days in October in it. All right, and this red week over here, it's only 1 trading day in September inside this week, right? But for full weeks in September, we only had 1 bearish week in September, right? The first week of September was bullish, right? It was comprised of 4 trading days in September, right? Because the first trading day was inside the last week of August, right? The second week, 5 full trading days, very bullish, right? We closed almost at the top of the week, right? The third trading week, 5 full trading days, very bullish, closed almost at the top of the week. Then the fourth trading week. Oh, and then some about the third trading week. This week, right? Who knows what happened this week? Something that people try to make very scary. Boo, 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 boo. Who know what that is? Who know what that is?
Is that FOMC?
Not FOMC. Not FOMC. Somebody, they try to make it very scary. It happened in the third week of September. It happened on September the 19th this year, right here. Do you know what it is? They used to make it very scary back in the day. Oh, yeah, that's it, FC. Quad Witch. Oh, it's Quad Witch. Oh, y'all look out. Oh. Well, people used to get on my nerve when Quad Witch was coming up. Oh, my goodness. People mess around and learn a new word. They made Quad Witch to be something so much more than it was. Listen, I was waiting for it so I can. She said, I was waiting for it so I can hop into. I'm gonna call Mark today and I'm gonna say Felicia was out there talking mess. I'm gonna say Mark, Felicia was out there. Felicia was out there talking mess. I'm calling right now. Let me call him right now. Mark, what you doing? Hey. So we had Quad Witch in that third week of September, right? For those who don't know, there's a expiration every month, right? There's an expiration date every month, and it's typically it's the third Friday of every month, right? There's an expiration every week. There's really an expiration every day, but there's an expiration every week. But the more prominent ones are the monthly expirations, and even more prominent than the monthly expirations are the quarterly expirations, right? And the quarterly expirations, during the quarterly expirations, there's four type of expirations that are happening at that time. That's why they call it the quadruple witching, right? Because you have like futures, options, options on futures, and I can't ever remember the fourth one. There's four different expirations. Um, Let me go. Who, if somebody know, put it in the chat. I'm fun to go ask Gemini. All right, I'm about to ask Gemini. If you know what that fourth one is, let me know. I'm going to ask Gemini. I'm going to ask Gemini. What are the expirations during quad witching? All right, stock index futures, stock index options, stock options, and single stock futures. Those are the four expirations that's happening, right? So it's this is the one that I because I said futures, options, and options on futures, right? So it's the futures, options, and then the options on futures. So, oh, and then of course the one I trade, the indexes. Man, the indexes is the one I wasn't remember, the one that I trade. So you got the futures, you got the options on futures, you got the options, and then one called single stock futures. So futures on stocks. All right, so now we got it. Futures, what I trade, like the NQ, the ES, the gold futures, the bond futures, the right. You got the options, what I used to trade, right? The options, right? And then you got the index options, so options on the futures, options on the indexes, right? Like the S&Ps, right? And then single stock futures, like futures on like stocks itself. All right, there you go. Quad witching. This is what quad witching is, right? For anybody. So now you don't have to be scared of quad witching. You don't have to think quad witching is this thing that's going to give you some kind of special like insight over, you know what I'm saying, like the market, right? Because when it comes to an expiration, right? When it comes to an expiration, the only thing that means is you have to make a decision about your position right now. You're no longer going to be able to hold this position on this contract that you're holding it on. This contract is coming to an end. So you can no longer hold it. So you either have to close it permanently or close it and open up a new position on a new contract, right? That's all quad witching is, right? That's all it is. Okay. It doesn't mean it's going to offer you some kind of super buying or selling opportunity, right? Now, you can experience some volatility on a expiration day. And why is that? Because you have positions that have to close. So if you're closing positions, what does that mean? Contracts are being closed, right? And in liquidity is being injected or taken out of the market because you're closing and opening contracts. So liquidity is in a constant state of flux of coming in and out of the market, in and out of the market, in and out of the market, because you're closing positions, right? If the position is profitable, right? It's money coming out, If the position is negative, is money actually being realized going in. If you're opening new position, it's money coming into the market. If you, like I said, if you decide to close it, it's money coming out. So you got a flux of money going in and out, and it can create volatility, right? And since it's like big positions outside of retail traders, you can't just close it in one day. So it's done over a period of time, sometime up to 2 weeks, right? Sometime up to 2 weeks. So you will see a state of volatility, especially that week of, right? Sometimes up to the week prior to that expiration date. And then on quad witching, you have a lot of different contracts that have to close. So that's a potential for a lot more volatility during that time. And that happens on the third Friday of the last month of the quarter, right? The third Friday of that third month. So January, February, March, the third Friday of March. Matter of fact, the dates was up there, right? The date, I had the dates up there. Quad which dates, right? So, right, quarter three, September 19th. That was this year. Quarter four, it's going to be December 19th. Quarter one, going to be March 21st. Quarter two, going to be June 19th. Quarter three, going to be September 18th next year. And then quarter four, going to be December 18th next year. Right. So the third Friday of the third month, right? That's your quad witch dates. And then your normal monthly expiration is the third Friday of the month. On month one and month two is just monthly expiration. On month three, quad witching. So you got quad witching happen, right? Then we got December quad witching happens. So October, November, quad witching. January, February, quad witching. April, May, quad witching. Y'all get the picture? Okay. This squirrel moment was brought to you by the Smart Money Manuscript. First link in the description below, $69.99. Get all of your trade and investment education that you need in one place, along with monthly mentorship. All right. So we opened up the month, right? Off the weekly calendar, we can see we dropped down, took out short-term sell side in the form of that swing low right there from the month of, from the week of August 18th, right? We dropped down, took out that sell side from the week of August 18th, traded up, took out the buy side, all right? What signature is that right there? When you trade down, take out sell side, reverse, take out buy side. What signature is that? That's a wick snatcher, right? So we opened up the next week, barely moved down. There's a little itty bitty little wick right there, right? So we opened up just below the closing price there, barely moved down any. Then we took off, took out the high, right? Super bullish expansion, right? Took out that buy side liquidity there, made new all-time highs. All right. Once we made new all-time highs during the second week of the month, right? We came over here in the third week of the month, started, traded down a wee bit, right? Traded down below the closing price, traded down a wee bit, reversed, took off, super bullish expansion, closing up here near the highs, and created a bullish fair value gap right there, right? Creating a bullish fair value gap on that week of 9/8, September the 8th. Busy right there. Then we opened up slightly down from when we closed, right? Traded all the way down here and just about overlapped the September 8th weekly candle, but we didn't. We stopped, then traded we back up, right? Now, I don't know if we went up or down first, but you see, we made a high and we made it. Oh, we went up first because we was looking for the bearishness. So we opened up slightly down, traded up above the closing price, made all-time highs. Then we came all the way down, almost overlapped with the September 9th weekly candle. Then we came all the way back up and closed up here, right? Pretty much a little indecision candle, right? Because we did just about as much work to the top and the bottom, right? Did a little bit more work toward the bottom, but pretty much an indecision candle, right? But we did take out buy side, okay? And then now we opened up this week here yesterday, and we traded all the way up thus far into the upper quadrant of this weekly wick right here. And then we've come back down and we closed near the low of that. Hold on. I think my son knocking on the door because he left his key. Where'd you lose it? I'm saying, did you have it away from the house, or did you? So you have a single key device. Don't probably like in his pants or in the basket somewhere. I'll tell him might be in his pants or in the basket somewhere, but he's got a single key hanging in his pocket. The joys of fatherhood. Then looking at our daily, right? Looking at our daily chart, right? Oh, you know what? We don't have no day in September in that week there because September, the 1st of September was a holiday. I noticed that right here because that's August 29th, and then that's September 2nd. September 1st was a holiday. So we don't have a day in September inside that weekly candle right there. Right? There's no day in September there. It's only starting there. All right. So, like we said, we came here. We have a few down days in September. Let's go through and look at them. We got 1, 2, 3, 4, 5, 6, 7, 8. We got 8 down days in the month of September. All right. And there were one. Gotta add one. There were 21 trading days in the month of September. On average, there's roughly 20 trading days per month. So we had 21 trading days in September. And if you're looking at that saying, hey, Tim, that only says 20 days, but it's 20 days in between from this line to that line, but it's not counting the line that is the day that is anchored on, right? It's saying it's 20 days in between these 2 points, but it's not counting that point. If I anchor it there, now it's showing you this 21 days. So it's 21 days in between these points, right? Because if I bring it back here like that, it says that it's 1 day, but I'm encompassing 2 different days, 1, 2, right? So it's not counting that first day. So you have to add that first day to it, right? So it's 21 trading days inside the month of October. And 8 of those days were down days. 1, 2, 3, 4, 5, 6, 7, 8, right? 8 of them were down days. Okay. And then over the last, let me see, this was month. This was 1, 2, 3, 4, 5. Last week, right? We had 3 consecutive down days. Those were the most consecutive down days, right, throughout the month. So we had 3 down days last week, right? Then we had Monday, Tuesday, Wednesday. Then we had 2 down days the week prior to that. And then every other week, we had 2 down days that week, and then 1 down day this week. So we had 2 down days the first week, 1 down day the second week, 2 down days the third week, then 3 down days the fourth week, and then these last 2 trading days were green. All right. So September was extremely strong on the buy program when it wasn't giving up nothing. The buy program said, if you're trying to pick the top, you are sadly mistaken, my boy. You are sadly mistaken, my boy. All right. The beginning of the month was pretty much a straight shot, just going up, right? After sweeping that sell side liquidity that we talked about, right? We dropped down, took out that sell side liquidity, then nothing can stop me. It's all the way up. Didn't give any type of retracement opportunity. All right. Once we got to the 16th, right, start to back off a little bit, right? We made an all-time high, a new all-time high on, let me go in here. I don't have a line for all-time high. So wait a minute, was that the monthly high? Let me see if that was the monthly high. Maybe it was. Let me see. It was. Okay. So we made a new all-time high here on September the 12th. Right? September the 12th, we made an all-time high. Boom! Right? So when we come from here, right, and go there, come here and go there, right? Right there. What, besides a Wonder Woman logo, right? What has the algorithm done right here? Right? Besides make a Wonder Woman logo, right? What has the algorithm done right there? Somebody tell me.
It balanced that price range up in there when it went back up and left the area.
Oh my
God. No? Okay.
Just looking at the screen right here, what has the, besides form a Wonder Woman logo, what has the algorithm done in this area right here? What this W is that I marked out? What has the algorithm done right there? Not yet, Kim. Not yet. Kim said a balanced price range. Not yet. It's not a balanced price range yet.
Engineering liquidity.
Yeah, but it's always doing that. But this in this range right here, what is this? If it's not a balanced price range yet, what comes before the balanced price range? What has
accumulation?
Well, it's
no, that's manipulation, is it?
It's when you're accumulating. What are you doing? You're not engineering liquidity.
You're offering sell side and you're offering buy side.
And what is that right there? That means price has been what?
Consolidating.
No.
Let's
You
see.
offering sell side or you offering buy side what?
Oh,
Liquidity.
they've been
Generating liquidity.
accumulating shorts.
Mm-mm. Very good, hit learn and share. Price has been very efficiently delivered.
Oh yeah.
That's
We
the
We was gonna say that next.
you what you said? That's what? You know what you said, Yolanda? You said that's what? You said that's what?
that's a once it's officially delivered, it's a balanced price range, right? But you
Nope.
saying you want
Nope.
it has to leave that area
It
first.
has to leave the area. If it
Okay.
doesn't leave the
Okay.
area, it's not a balanced price range yet. The leaving the area is what makes it a balanced price range.
Okay. All right.
As long as you're in this area, you're just still in an area that's being efficiently delivered. But once you leave that area, now it's a balanced price range. Right? Do we get it? Everybody understand that? So when you offer sell side delivery, when you offer buy side delivery in the same area, that's just efficient delivery. Right? Now, once you leave that area, right here, we're leaving the area now. Right? Cause I said up to here, what has the algorithm done? The algorithm has efficiently delivered price. This move right here, that created a balanced price range here because we have left an efficiently delivered area. We now have a balanced price range right there. Okay. Now that we have a balanced price range, do you notice what the algorithm left at this old high right here? Right? What did the algorithm leave at this old high? Remember, we talked about this. When you grade a dealing range, right? Let's get some of this junk off of our chart here, right? When we grade a dealing range, what do? We go from the highest high to the lowest low, and then we put that's 66, that's 51, that's lower, right? We go to the highest high and go to the lowest low, and then we break it down into quadrants, right? We have all of these quadrants here, right? What did the algorithm leave at the highest point of this dealing range right here? It left a BISI right there, right? Where is that BISI? That BISI is in line with one of the levels of this dealing range right here. That BISI is in line with this old high, right? So we have confluence of PD arrays. We got an old high and we have a BISI, right? If we go, come on, Smart Money Manuscript. If we go into our PD array matrix, I didn't make this up. This is made by Michael J. Huddleston, right? If we're above price, right? If we come above price here, right? And then we come back down, right? We're coming back down and looking for something to buy off of, right? We have old lows and old highs, right? We have bullish fair value gaps, right? These are things when you're coming back down, if you're above price and you're coming back down, when you get into a discount, these are things you're looking to buy off of. An old high is one of those things. A bullish fair value gap is one of those things, right? When we look at a balanced price range, you're not anticipating price to come back into this range, right? We're coming here, we're leaving this area, right? On the daily time frame, right? On the daily time frame, there's no clear swing low except for the low that's created in the overall dealing range, right? So if we come to our lowest low and take it up to our highest high at this time, right, after leaving this area, right, there's no clear swing low right here, right? So what do we look at? We look at, we want to look at when you start to leave this area. We came up, made relative equal highs, right? Pulled back down into the range, and then we started to leave the area there. Now, right? If we form an order block there, I like to come to my order block because the order block has a job in this dealing range, right? You could very well go to the low of this candle because this is when we started to leave. I just like to include the order block, but this is when we started to leave the area right there. So now in the discount of this range, we have a bullish fair value gap, right? We have a old high, right? And we have a order block right there, right? All of these things, right? Because you include that low there, right? Even if you don't include that low, the wick of the order block is still there, inside there. The body of the order block is inside there too, right? And if we look at our, what's the name, right? Bullish order block, rejection block, old high, right? So come down, right? What do we come down to? We come down to a bullish order block. I mean, a bullish fair value gap and a old high, right? As prices coming down, right? As price come down, we come down into a bullish fair value gap, right? A old high, right? And then we even, if you include this in your range there, we come down into a order block here inside the wick, right? But where did price leave that imbalance, right? It left that imbalance right there on that quadrant level of the dealing range, right? The algorithm is gonna, right, show you certain things. It left it right there on that quadrant level of that old dealing range, right? And then speaking of the dealing range, let's go in and check our current dealing range that we in to see how far we came down. All right. So we came down below equilibrium, just barely missed the lower quadrant, right? Came back up and closed up here at the upper quadrant, right? So what do we always say about wanting to see price on closing basis when it comes to dealing ranges, right? What do we say? We want to see it on a closing basis, respect equilibrium. We would prefer to see it just touch 25% and go, right? But we come down, we respecting equilibrium, even if we include the order block, right? We're respecting equilibrium. And if you include the order block, you're even closing back above the 25%, right? But the wick is doing the damage, right? Your wick is doing the damage coming down into the imbalance, right? Your wick is doing the damage coming down into the imbalance here and then coming back up. All right. Then after that, we expand up, right? Right. Keep going up, create another fair value gap, right? Keep expanding up, right? Keep expanding up. So now at this time, we're watching. This is our dealing range here, right? That we're watching there, right? We're going up, going up, going up, right? So then we start to pull back down, right? And we look here. Where's this fair value gap right there created? Right there on that quadrant level, right? As price was going up, the algorithm knew that this fair value gap was going to fall on that quadrant level if it came up here and made a high right here and then started to retrace back down. The algorithm already know where it's going when it's on its way there, because it's doing all of these calculations to know, right? I know what I did this day right here. So if I go up to here, right, then I'll have a discount PD array down there, right? So when we start to pull back, right, where did price stop at? That lower quadrant of the dealing range, right? That lower quadrant happens to fall on what? Remember that old bullish fair value gap, right? That we traded down through here and traded down to this fair value gap, right? Most people say, hey, we've already repriced that. We don't need to look at that fair value gap anymore. What does Michael say? My PD arrays never go stale. So if price is trading back in the vicinity of that PD array and it supports your narrative, you want to pay attention to it. You want to pay attention to it, right? Doesn't mean it has to support price, but when price is bullish, right? When price is bullish and you have a discount PD array and you have a confluence of PD arrays, right? But Tim, what do you mean confluence of PD arrays, right? You have a bullish fair value gap right here and you have a discount, you have a discount wick right there. Two PD arrays, two bullish PD arrays in the same place, right? Because this discount wick is below price, right? This is in essence is a gap that's below price. So you got a fair value gap and a discount wick, both designed to support price because they're below price right now. Right. So you got a confluence, bless you. You got a confluence of PD arrays right here. Okay. So you want to keep that in mind. All right. And then if you're in the the thought process of myself, right? I like to focus on the PD arrays that are more recent in the price first, and then just use the ones that are further back in price as confluence, right? So I would be grading, right? The wick, right? I'll be grading the wick and then looking at the fair value gap also, right? I'm grading the wick and I'm also looking at the fair value gap also, right? So I have a nice confluence of PD arrays to help me understand where price is reacting on the intraday time frame. And if you notice here, the upper quadrant of the wick falls right in line with the lower quadrant of the dealing range. That's not an accident. The algorithm knew that starting at this low, if it went up and made that high, right, the upper quadrant of this wick would align with the lower quadrant of that entire dealing range. The algorithm knew that. That's not an accident. All right. The algorithm knew that the upper quadrant of this wick and the lower quadrant of the dealing range was going to be right in line with the consequent encroachment of the overall PD array right there, right? Because we got a small volume imbalance there. So we include that in the entire inefficiency and boop right there, right? Because I think that's the spot where it's a small inefficiency. Let me double check that. Close 52.75, open at 53. Yep, it's a one tick volume imbalance there. So the algorithm knew those was going to be in close proximity. And then we trade back down, right? And poke just below consequent encroachment of the overall inefficiency, right? Come right back down of the over. See, this is the overall inefficiency right there. This is just the fair value gap right there. But when you include the volume imbalance, that's the overall inefficiency. And that's the consequent encroachment of the overall inefficiency. And we barely poke below it there. And then we reject off using all of this confluence as, all of this support right here. Well, all these converging PD arrays as support. That's what I'm trying to say. And then we rally back up, right? And where do we close? We close right here above, well, at equilibrium of the overall dealing range. But notice where that is also, right? If you know anything about these boxes here, that little name there, that rests right at consequent encroachment, right? And if I fatten up this line and darken it up some, you can see that that consequent encroachment lines up just about perfectly with that equilibrium of that dealing range, right? So this, remember when I said this entire inefficiency is right smack dab in the middle of this dealing range? The algorithm knew that was going to happen on the way up. It leaves these breadcrumbs as it's going. It's up to us to be able to identify them and say, hey, I see you. I know what you're doing. Okay. Our next day, we open up and we drop down into this discount wick right here, right? Not only do we drop down into this discount wick right there, we drop down into that order block right there. All right. And then we rally back up and close above that fair value gap that we came up and respect consequent encroachment of. Okay. And then we open up the next day. Then we take off, right? Like a bat out of Hades, right? But we fail to take out the high. So we've come up here and created relative equal highs, right? In the midst of a buy program. Then today we drop down and traded over the candle from September 26th, right? Eliminating the possibility of creating a BISI that big. This elimination of that BISI now sets up an opportunity for an immediate rebalance to go into this relative equal highs that was engineered there, right? It has now set the stage for a possibility of that, right? And that's what you would be looking for. Let me just get this back right. Why is it not undoing? There it is. It undid it. Okay. And that's what you would be looking for because we are still in a buy program, right? And as long as we're in a buy program, you go with that bias until you're proven wrong, right? Like we've been saying the whole time, on the daily and higher, we've been in a buy program, right? On the intraday time frame, meaning this area here, right? Meaning this area, when we drop down here and retrace back up, we're still inside this sell program, right? Because we dropped down here and we traded back up to there, right? So on the intraday time frame, trading above this high right here, right, will complete this market maker buy model, right? But we're still inside this bearish order flow on the daily time frame, right? I know it may sound confusing to you, but when you're in a buy program on the daily time frame, the intraday time frame, y'all hold on. Calandra, All right. So when you're in a buy program on the daily time frame and you come to an anticipatory reactionary point, when the daily time frame has discount PD arrays that it can trade to and be within healthy price action, the intraday time frame will switch to a sell program, right? You will get a bearish breaking market structure on the intraday time frames. We pointed that out from like the 15-minute to the hourly, right? Looking for, I don't know if we saw it on the 4 hour or not, but we're looking at all the intraday time frames that had bearish breaking market structures. And then we came to our anticipatory reactionary point on the daily that was supposed to support price, right? And once we got there, now we're extending back up, right? So on a daily time frame, we're still very much so in a buy program, but we still have not invalidated the sell program of the intraday time frame. We're leaning more toward the daily time frame, but we can't just come out and say, oh yeah, this is over, yada yada yada. You have to watch for the signatures that the algorithm is giving you if it wants to take out that high, right? Yes, that will complete the market maker buy model, that will continue the bullish narrative that the daily time frame is on, but we can't just force it. Just like when we was over there in August, coming into August over here, right there, when we traded above there, what in the world was that? What in the world was that? I don't know what it was. I don't know if it was it looked like it might have been a mosquito hawk, but I saw something like out the corner of my eye. Looked like it might have been a mosquito hawk, but I'm not sure. But I got to make, I know I just opened the door to let Chris and Calandra in, but something, cause the front door right here next to the room, something just flew by and scared me half to death. What was I saying? I don't know what I was saying. All right, so we oh yeah, when we was over here in August, right? We can't just force the, oh, we're in a bearish season, so we're just gonna make price go down. We can't, we got to look for the signatures, right? We was like, is this a smart money reversal? Right? Is it giving us what we need to say, okay, yes, that's a smart money reversal. We're on the right side of a market maker sell model. We're going down to here, right? You have to watch for the signatures, right? Just like here, the daily time frame appears to be drawing right there, right? You're leaning more so to that. Why? Because the higher time frame is bullish, and that's where price seems to be going. We expanded up, we retraced down, and we're going back up. We've created relative equal highs. We created a possible immediate rebalance. So we'll be looking for it to take the highs. Okay. But we can't force it. We have to watch for the signatures that it gives us. Okay. Now let's look at the intraday and look over from um, last week. Right, we'll look at from last week. The 22nd. I'll get out of my way. Y'all out of my way. I can't see nothing. You know what I could have did? I could have just turned on last week's new day opening, new week opening gap. See this what, see how I was just struggling trying to find where the I was struggling trying to find where the open was from last week. But if I come here and find the 22nd, boop, turn it on, I know right there, boom, that's the start of the week right there. If I come on and turn it on, that's the start of the week right there. So last week we had that Friday before last week started, we made all-time new highs right there. We traded up, made all-time new highs. Right. We opened the week up, dropped down, right, into a discount of the area that left this efficiently delivered area right there, right? Overshot the fair value gap a little bit, right? Sat there and consolidated inside of it, consolidated inside of that order block, that bullish order block there for a while, right? Displaced away, right? And made the current all-time high, right? On that Monday afternoon. Last Monday afternoon made the current all-time high right now, right? Hung out up there for a little while, created relative equal highs there on the intraday time frame, right? Then we dropped down, right? Created relative equal lows on this hourly time frame, traded back up into a premium of the drop down right there, right? And then dropped down and got a bearish breaking market structure on the hourly time frame, right? Bearish breaking market structure on our hourly time frame. That low went up, took out that high, dropped down, bearish breaking market structure. What does that give us right here? A bearish breaker. Boom. We got a bearish breaker right here, right? We got a bearish fair value gap right there. What does that give us? Boom. The unicorn model, right? What's the unicorn model, right? When you have a bearish narrative, right? And you got a bearish breaker in line with a bearish fair value gap. When we retrace back to that bearish fair value gap, that gives you an opportunity to short and call a unicorn model because it's a fair value gap in line with a breaker, right? Now, all this has to fit into your narrative, right? You can't just go pick out any breaker and fair value gap and be like, oh, that's a unicorn. I'm going to go long or I'm going to short it. It has to fit your narrative, right? What is that? The intraday time frame went up, took out buy side, traded up to an anticipatory reactionary point based off of fib extensions, right? Came down, bearish breaking market structure, right? Now retrace back. And what else? We got a reason to come down here, right? Came down, boop. Once we came down there, then came back up. Okay. Came back up. And once we came back up, we came up, created our relative equal highs, like we said, right? We talked about this yesterday. We had took out that buy side there. And then we said we got internal buy side there, right? Then after that, we have a small SIBI up there and then the high. Okay. Let's see if we made it to that small SIBI. That
You ready?
Say what? Oh, y'all don't worry about that. That's probably just Yolanda off mute again. Did we get to that small SIBI? And looks like we did. Looks like we did. We did hit that small SIBI yesterday morning, right there. All right. So we traded up there. That's the SIBI that we talked about yesterday. Said we had already traded up into this buy side, right? We traded up into that buy side there. Okay. And then we went up, touched the SIBI right there. Right. That was the highest imbalance on this time frame. Right. We talked about this inversion fair value gap. That was the first imbalance that was created when we displaced up before dropping down, getting that change in the state delivery right there. Right. So we traded up into the inversion fair value gap and the highest SIBI. And then we pulled back, right? Came back down to the opening of the week, right? That was our opening on Monday, right? Today during 9:30, we dropped down below our opening price of the week, right? And then during all this consolidation, right, we traded back up. Okay, traded back up into, did we make it into that inversion fair value gap? Let's see if we made it there. That's the inversion fair value. I think that's the inversion fair value gap that Abdul was talking about. I don't know if he marked it on an hourly chart or like a lower time frame, but he was like, will that act as an inversion? I like, you don't want to go against the grain. You want the algorithm to prove to you that it wants to use that as an inversion fair value gap. Now, on this hourly time frame, just in case Abdul come back and look at this later, or anybody else who wondering, right? We came here and we hit it, right? You can say, well, Tim, it worked out perfectly. It acted as an inversion fair value gap and it traded back down, right? Yeah, in the sense of trading up and coming back down, just back down to a discount, you're right, right? And if you was trading on lower time frames, you could look for signatures to give you a reason to trade back down to a certain point, because we already said you can trade against the grain on intraday time frames, but you just want to be in and out, in and out, in and out. Now, on this hourly time frame, and this is an hourly PD array, right? You haven't proved that you want to use this to go down, right? And how do you do that? We've traded up to it. Right now, it's just doing its job, right? But it's not saying I want to keep tanking. You have to invalidate, right? You got to invalidate this bullish move, right? When do you invalidate this bullish move? When you come back down outside of the low, right? Because right now, the only thing you've done is expand up, right? And trade back down to an area that's designed to support price. So all you did was expand and retrace. You haven't shown that you want to keep going down. All right. And you can come all the way down into the rejection block and still go back up. See what I'm saying? So there's a lot of manipulating to the downsides you can go through before you prove that this right here is taking us lower. But like I say, on the intraday, on a lower time frame than the hourly, right? Let's go in and look at it. Let's put a little box right here so we know where to go look on the hourly time frame, right? And you can go and look for signatures that give you, right, a clue, right? So this is an hourly time frame. Let's go down to a 5 minute. Let's go down to a 5 minute, because on an hourly, a good entry time would be a 5 minute. You can even go down to a 1 minute if you want to. All right. So on the 5 minute time frame, right? On the 5 minute time frame, we, right? If you look here, what man, this I'm gonna have y'all. Well, I'm telling you, y'all gonna be looking for this everywhere. Y'all gonna be trying to trade this everywhere. I'm about to create some monsters, right? If we look here, right? You know how we talk about that balanced price range, right? We got the buy side coming here, buy side delivery there, offer price in both directions there, right? We got a little balanced price range there. Okay, we come up, touch our anticipatory reactionary point, right? Trade back down off of it, create a busy. Okay, this next candle rips through, creates an inversion fair value gap, and it disrespects that wick right there inside that balanced price range, right? Come all the way down through the balanced price range, right? So then here, boom, you can be going short there, right? You can wait on a little retracement back up and watch the quadrants of the wick inside the balanced price range. Then you can take it back down to the low right there, right? You can take it back down to the low right there, right? quick little scalp on the 5-minute time frame to trade inside that area there. All right, that's one entry. People be like, oh, you just make stuff up. The gang know I done showed a few examples of me taking real trades using that exact same idea, right? Because when you understand order flow and price delivery, you can engage with the price how you want to. You don't have to wait for a 2022 model. You don't have to wait for a Reaper. You don't have to wait for Venom. You don't have to wait for all the fancy names that Michael gives stuff. You can just engage with price because you understand order flow and price delivery. Okay, on a 1-minute time frame, right? 1-minute time frame, we've come up to our anticipatory reactionary point. We're starting to engineer a little liquidity there, right? We break down, right? We got 1, 2 inversion fair value gaps right there, right? We create a SIBI there, a SIBI there, right? So right now for me on the 1-minute time frame there, right? Really nothing like giving me a strong indication of, hey, yeah, I just want to enter off of anything inside here, right? Then when we drop down here, there, we get a little, the 5-minute, on the 1-minute, I don't see anything that's like super clean that I would want to trade inside. I ain't gonna hold you. On the 5-minute, I saw something that I trade all the time, right? But on the 5-minute, on the 1-minute, I don't see anything super clean that would have made me want to take anything up in this area here, right? Now, once we come up here and then drop back down there, right? We got our classic V that we like to see. Trap traders are there, right? Looking at all of this as a balanced price range. Traders are trapped up there. Now we got a SIBI over here that you can short off of coming back to the low right there. Low hanging fruit, right? Base hits, low hanging fruit. You're going below midnight. You got sell side there, right? Low hanging fruit right there, base hits. Okay. Something that would have been there, but nothing over here that I see so much. All right. But that's how you can look to trade off of that on intraday time frames.
Can you go back to that 5-minute one more time that you were just explaining, please? Oh, goodness.
Oh,
Okay.
goodness.
Okay, will you go to that area just one more time? Okay, so the area you were just talking about, so right there we offered sell side, and once we came offered that buy side and left balance just in that little piece, right? That's what you were saying?
Right here.
Yeah, because we offered the
Yes.
sell side.
We offer the buy side delivery here,
Yeah,
like coming out, right?
okay,
So we're coming out of this area here, right? And we offer buy side delivery there, right?
yeah.
And then we come back in, offer sell side delivery, and then we leave again, right? So now you got buy side and sell side, and then we leave that area. So this is a little balanced price range right inside there.
That's what I have to keep remember. Okay, so almost like an immediate rebalance too, right?
Yes,
So to
but we
speak.
only
Okay,
thing we didn't trade into that, so it's not officially an immediate rebalance because we
okay,
left a little SIBI right there. But
yeah.
we do got a balanced price range here because we offered buy side, we
Oh,
offered
okay.
sell side, and then we left. Right. So here, like if you look at it here, we offer buy side, we offer sell side, and then we left the area. Right. So
Right,
now
right.
this right here is a balanced price range. Right. And when we're
Okay.
leaving the area, right, we got buy side delivery as we're leaving the area. Then we trade back down inside this candle here, offering sell side delivery. Right. So you got buy side delivery, sell side delivery, and then we leave the area. So now that right there is your balanced price range there. And then we come back and we're cutting through this balanced price range like butter, slice. You see what I'm saying? So the algorithm is disrespecting that balanced price range. And then when you look at this wick right here, we came and closed below consequent encroachment of that wick. So we're pushing through. It's like we're cutting through this area like butter, right? And then once, like for me, like once I see this, that's enough for me. But you might want this to say, okay, we came all the way to the bottom of it. And so now that we're leaving, I'll enter here because we are officially cut all the way through the balanced price range. But this closure below consequent encroachment is enough for me, especially coming off of an anticipatory reactionary point. Because if we wanted to go higher, we would use this as support instead of slicing through it. You would either bounce off it or you would stay there and consolidate, but we just cutting right through it, right? And with a balanced price range, we want to see it use it as support or cut right through it. And when I see it cutting through the balanced price range, that's enough for me.
Yeah, it's the little nuance, like, and the small thing of remembering that even though that candle ended up green, the wick down was the offering of sell side. See,
Yes.
yeah, it's the remembering, putting that, yeah, okay,
Yes.
because I totally forgot that. So it's, even though it's a green candle, the fact that it wicked down to offer the sell side, so to speak,
Yes.
first, it's
Mm-hmm.
still the offering of, okay, all right,
Yeah.
thank you.
You're always looking for the offering. And for everybody that's listening, it's the offering of sell side delivery, right? It's sell side delivery, not sell side liquidity, not buy side liquidity. It's the action of moving up and moving down, right? When you're moving up, you're delivering to the buy side. When you're moving down, you're delivering to the sell side. So you're offering buy side and sell side delivery. You're not going below lows and taking out sell side liquidity or going above highs and taking out buy side liquidity. That's what we always got to remember, right? The efficientness of price is just offering price in both directions, right? We always got to remember that offering price in both directions. It's very easy to see efficient delivery when you're in a consolidation. Excuse me, but you always want to be looking for that efficient delivery in other little places where the algorithm is leaving little, you know what I'm saying, clues for you. It's leaving
Would it
little
have
clues.
been enough with that, even though we didn't revisit it, how we created that inversion with such a, that red candle left with speed to create the inversion? Is that enough for a change in state of delivery to clue into, we maybe, like you said, at least going to the low hanging fruit of that low that sent us up there? Or
Not on
like
this time frame.
not on that time frame.
Yeah,
Okay.
not on this time frame. You always want to look for you don't want to tie it to something that is not, right? You got two up close candles. So you don't want to say, okay, I can take this as a change in the state delivery. No, this is your change in the state delivery on this time frame. Right now, on a lower time frame, you may find a change in the state delivery here, right? But for this time frame, that's your change in the state delivery. So we don't want to say, oh, this is enough for me to look at. Now we always want to, we don't want to put the PD arrays and the concepts there. We just want to take what the algorithm is giving us, right? And like, we want to look at it for what it is. Okay, we got an inversion fair value gap. The speed of this coming down, giving me an inversion fair value gap. Okay, I got an inversion fair value gap. Now that I got this inversion fair value gap, right? Since I got inversion fair value gap and I'm closing below this gap, consequent encroachment of this gap, if you will, because it's a wick. Now you can say I anticipate this to be a breakaway gap right here once I create this, because it's like we're disrespecting two PD arrays there. So right now we're not anticipating price to try to trade back up in there because of the heaviness of price, right? You can look at it as, okay, I'm not expecting us to hit that inversion fair value gap right now because I'm looking for this SIBI that it just created to stay open, right? And now that we've closed at the low of this balanced price range, I can enter here because we've cut all the way through the balanced price range and I got a breakaway gap that I'm not anticipating price to trade back up into. You can look at it in that sense. But as far as the change in the state delivery, you can say, okay, we got a type of change in the state delivery here, right? That's enough for me to say, okay, we're shifting bearish because we got an inversion fair value gap. That's a type of the change in the state of delivery, right? But the actual change in the state of delivery is not going to come until you offer that price, that opening price of that order block, right?
And like you said, even with that other gap coming, the city coming back down in that same area, making some of that a BPR, it still doesn't matter because we had those two up close candles.
Mm-hmm. Yep,
Okay.
exactly. All right. And then we traded back up here. Right. We finally came back up into the breakaway gap, including the imbalance right there. Right. We came back up to the breakaway gap there. I just put that line there so we could see exactly how far we went up. Right. And you see that we're inside of that breakaway gap right there. And then for everybody that be looking for ICT PD raise, this is Venom. Right? That's Venom. Right? You got the one strike up, one strike down. These are your two fangs. Right? Strike up, strike down. These are the fangs. Like you got two teeth that's like fangs skeeting the venom in, and you trade back up into that imbalance, then go back down. That's venom right there. For those that's always, oh, how do I identify it? How do I identify venom? Right. And then also with venom, it doesn't have to be right next to each other like that. How we got that up, then straight down, strike up, strike down. It could be a strike up here and then a strike down over there. But then you just got as long as you got the two fangs and you trade back up into it, right? Because you can have some time distortion in there, then get your strike down, right? But as long as you got that balance price range up there where you got the two fangs, trade up into it, drop it. Right. Venom. That's all I got, man. Oh, y'all know what? No, I can't do it on this right here. I can't do it on this video. Do anybody got any other questions? Right. I saw on Twitter this morning, Michael said he was going to release a new PDub rate. It's fun to be. It's about boy every influence in the world fun to be talking about this. ICT videos. Videos. There you go. ICT suspension block. The suspension block, brother. ICT done. Hey, he finna release the suspension block. Gang. If y'all want to watch this with me, I'm finna do a watch party. In the gang. I'm finna do a watch party. If you're not in the gang, go ahead and click on that Zoom link above and come over and Zoom, because I'm about to end the YouTube live stream because I can't play his stuff on my page, right? But I'm gonna do a watch party. If you want to look at the suspension block and review of September with me, it's 22 minutes long. Go ahead and click on the link. If you don't, tomorrow is Wednesday, so we got tape reading in the morning. Tomorrow is the first Wednesday of the month, so we're gonna have we're gonna have a monthly lecture, our monthly lecture for the diamond members. So we're not gonna do a price action recap tomorrow night. Empire Trading, if you don't get out here, ask me what a suspension block is when I just said this man said he just releasing it and what is a suspension block? Did I just say the man said he was about to tell us what it was? Hey, I'm not gonna do a price action recap tomorrow because we got lecture, monthly lecture with the diamond members. So if you're not a diamond mentor member, or if you're not in the game, if you're not a diamond member, then I'll see you Thursday at the price action recap. Right, diamond members, I'll see y'all in the morning for the tape reading, and I'll see you tomorrow evening for the lecture. All right. I still haven't decided what I'm gonna talk about because I'll be talking about so much during the price action recaps. So I figure out something to talk about in the lecture. It's probably just gonna be a review of something that we already know. If y'all want me to cover something in detail, put it inside the Discord tonight, inside the monthly lecture ideas, and then I'll put together something for that.
We
Until
gonna do
next,
the watch party or
yeah,
no?
yeah,
Stay on here or
yeah.
come back in?
Stay on the Zoom. Stay on the
Okay,
Zoom.
okay,
I'm
all
just
right.
gonna wrap up YouTube. I'm wrapping up YouTube now. Again, if you want to join the watch party and look at Michael's video that he just dropped today, I'm looking at it dropped it 3 hours ago, and he said it's 22 minutes. I'll probably put it in like 1.25 speed or maybe 1.5 speed, so it's going to be less than 22 minutes. And yeah, click on the Zoom link now. To everybody else, until the next time I decide to get on Al Gore's internet and share my thoughts on this thing that we call price action. It's your boy Timothy Lee Rogers Sr., aka Aranya Grande. That's just Big Spot. If you don't hablo español, y'all be safe out in these trading streets, man. Gone. Yeah.